Alrighty, good morning everybody. It is Wednesday, November 15th, 2023. Yesterday we had a little bit of a technical difficulty where I recorded the wrong screen. So the review for yesterday, you only hear the audio. And then our pre-market for yesterday for our members also, same deal. You couldn't see the charts at all. You could just hear me talking. So it is what it is. I'm back on a new setup in Vegas and forgot to reassign the screen. What can I tell you? But let's go ahead and jump into our pre-market for this morning and do a quick review. So let's go back to yesterday. In fact, what I'll do, because I don't have the review for Tuesday or Monday, I do want to go back and just take a look here at what happened on Monday. So on Monday, we talked about there being really no signs for the bears, maybe some small pullbacks. And I recall actually that we were talking about seeing some shorter time frame bearish signals from the highs of the week before, expecting there to maybe be some type of pullback with no real strong case for an area of where it was going to bounce. But we were expecting that pullback in the context of a strong market. And we talked about in the pre-market, so I mentioned this yesterday, try to go as quick as I can here. We mentioned how we were stair-stepping off of our levels coming into the open. So we held scaffolding within a couple ticks, came down, held the back end of our next roadmap level, right, our PDC, and then came down, and here's the open, the vertical line, and we came right to the VWAP, the 200, and the Hopel, and the Hopel held nearly to the tick. So right out of the open, if you didn't short the previous daily close in the pre-market, you had an opportunity literally 1 minute after the open to get short off of Hopel. And this is back on Monday, right off our roadmap level, right off a textbook setup, a nice pullback and bounce to the 38 retrace of that leg down. Everything lining up there, and you could have captured this whole sell-off. And then if you miss that, just 10-20 minutes after the open, you could have grabbed the back end of the 200. There's your next stair step down to the next roadmap level. Right, so you had plenty of opportunities to make money out of the open yesterday or on Monday, and then from there we got the reverse. Right, the polarity changed. You did get another opportunity to play this kind of bounce off a roadmap level, right, on these two occasions here as the market came back up, but it didn't go anywhere, right? And then we started to get this change in phase. There's your crossover. Here's the next crossover, and then the market tries to break out. Interestingly enough, once we came down and got back up above the Hopel here. Notice the market basically held Hopel here to the tick for 2 or 3 tests there, and then we just ripped higher. So you had an opportunity to buy the top end as the market started to break back above VWAP, get back above Hopel, and potentially look like we're starting to change trend. Notice what happened is the market retraced right back to the low of the overnight session here, tested into it by a couple ticks, and then this change in polarity occurred. Okay, so then we got a nice rip higher, and then the high of the day, what do you know, was our next expected resistance area up here, 44.31 to 34. So that was that major area of resistance from last week that we wanted to see the bulls get through. And then you can see here at the end of the day on Monday, they came right back to 31 to 34 here, or 31 to 34 right here, and literally to the tick held 34 on multiple occasions for the pullback at the end of the day. And then you can see also a beautiful leg out up to the expected resistance zone here, peeked through it, came down, and then we held 50% of the previous day to come up and hold the scaffolding at the end of the day. So even though it was a very balanced day, pretty sideways, all of the major inflection points on Monday were right off of our roadmap levels. The major inflection point being that PDC right there, right? We held it to the down, held it to the upside once we got back above it. We held the back end of our VWAP multiple times, the top end of VWAP multiple times throughout the day. We held 50% of the previous day on the pull. Actually, I take that back. That wasn't there at the time. That was for the next day, so I apologize about that. So got a nice healthy 50% pullback. Okay, that wasn't the previous day level, but nice 50% pullback, and then we bounced right back to our scaffolding level again. So again, pretty tight, pretty choppy. But we still had some beautiful parries, and the major rotations of the day were still right off of our roadmap level. So that brings us into yesterday, so we can get our pre-market started for this morning. Now, yesterday in the pre-market, we had CPI released at 5:30 in the morning. That led to this huge jump, right? This is why we want to be aware of news events and when they're being released so that we can be aware of potential jumps in volatility. So yesterday pre-market, notice what happened. So we came right down, in this case, this is 50% of Monday. When the CPI news was released, it literally ducked right to 50% of the previous day. This is why I tell you, our daily power levels, if you just traded power levels, scaffolding, you should be able to make money if you can manage risk. So we come right to 50% of the previous day, get this huge push out, and we just start ripping through a lot of the levels we were watching as potential resistance. Although what happened, interestingly enough, is the low of the CPI volatility jump was 50% of the previous day. And after this 20, 30, 40, 50, 60 point push, notice where the market had trouble, right at our next scaffolding here. And this was a very critical area in the chart yesterday that I told you guys about, 4483. If we were to zoom out and look on the higher time frames at what the market was contending with as price came up here, you would understand why I made a big argument for this area in the chart. So it made sense for there to be a lot of trouble for the bulls here, but because the market was so damn strong, they came up, they kind of petered out. Notice they held this level nearly to the tick, actually, not nearly, to the tick on this pullback, holding, get a little further, inch up a little more, pull back, hold it again to the tick, and then finally we continue to rip higher. So there was a lot of trouble right here, right in this area that I expected, and I told you guys this was highlighted on our charts as a potential resistance, okay? So we kind of get above that level, and right out of the opening yesterday, if we look at our plan of action yesterday, and move this down, no bearish things to be found, staying above the previous daily high, our previous bullish resistance, remember, 44.31 to 34, that area, I'm pretty sure that was the number, was extremely important for them to get above and stay above, okay? Now, break below previous daily low, 50% of the previous week, would be our first sign for change. We're testing into a very critical level I warned you about, 44.83 half. There's that level I just mentioned. If the bulls continue to rally, be aware of the scaffolding in the way before price gets to the major task zones and targets. Now look at this, guys. We were targeting 45.22 to 25, 45.56 to 65, and 46.03 to 09. Okay, these were the task zones and targets to the upside. What was the high of yesterday, guys? What was the high of yesterday? Let's just go right up to it. There's 45.22 to 25. The high of yesterday was 45.24. Okay, so I told you guys, if we break out, let's go zoom back to the open. If we continue to push and we hold above 83.5, which was a very important level of resistance, our target to the upside was going to be 45.22 to 25. What was the high of yesterday? 45.24. What was the major pullback and bounce at the end of the day? Our scaffolding level. Okay, what was the major resistance when the market started to push out of the open here yesterday? Notice we pulled back to the tick and held our scaffolding and pushed to our next scaffolding and got the largest pullback in the morning there. I mean, just, you guys, if all you did was trade our scaffolding levels, trade around the daily power levels, if you're not making money, it's down to psychology and risk management. Because these levels are literally, I've never seen anything in the 10 years I've been in this business working this well. All right, so our bias yesterday was to the upside. So buying our first expected support, you could have taken on 0 ticks of risk yesterday and captured a 20, 30, 40 point push, whatever it happened to be. I forget. 22 to 25 was the high. If you would have bought here at 83, you would have got 30, 40 points out of it. Okay, I don't know anywhere else. Here's our second pullback to our second expected resistance. We popped through, pull back, another opportunity with nearly no risk, a couple ticks to grab 20 points to the upside, 30 points to the upside. There's a great opportunity to short, but more importantly, if you were a bull yesterday looking to buy pullbacks, there's your pullback right to the 200, right to the 200, right to the 200, and our scaffolding. I mean, it's just, there's to the tick off the 200. And then again, once we got all the way back up, now you're going to have in-breaths, you're going to have pullbacks. That's what happened here. It would have been sexy for it to just hold off the previous resistance and the scaffolding. That happens sometimes, but they brought it just a little deeper. And then again, we got the push right in between, right inside of the zone. I told you guys, 45.22 to 25 is exactly, well, where are we here? I have the wrong screen up. 45.22 to 25, the first pocket on this right here. So I'm telling you guys, there's no better place to be if you're trying to trade the S&P and have levels and plans to trade with. So coming into this morning, I kind of just gave you guys some of the ideas for this morning if you're watching this review. So let's get into our pre-market for this morning and take a look at what we're dealing with here. Now, I just want to give you a visual here before we jump into this morning's pre-market. Here's the bullish first task we talked about. Actually, here's the bullish task we talked about a week ago. We came right into it after a strong push higher, and notice for 2 or 3 days the market had tested it nearly to the tick and then kind of peeked through and failed. That was our first task zone a couple days ago, November 8th. Just after I left for my road trip, I told you guys this would be our task zone, and for 3 days it couldn't get through. Our next task zone was going to be right here from about 31 to 34. What happened? For 3 days, we tested, pulled back nearly to the tick, tested, pulled back, and then here's CPI a day or two ago, and then we broke out. And like I said, when it starts to get really strong and the market starts to really rip, it's just going to go right through a lot of our levels. But if you were to zoom in on this candlestick, this 60-minute candlestick, you would see there was a bunch of trouble right inside of this next task zone. And then they came right into target 1, got a pullback, and then ripped up to this next bullish task zone, which we're testing right now. So first task zone down here was 4400 to 03. Couldn't get through it for about 3 days. Next task zone was 4431 to 34. Couldn't get through it for about a day and a half there. And then almost into the next day, we pulled back. But then the CPI hit. We chugged right through. And now here we are in our next task zone, the level I gave you, 22 to 25. And the market pushed all the way up and came literally right to it at the end of the day here. Petered out. And now you can see here we are struggling right at the next bullish task zone. Okay, so I mean, I don't know anywhere else where we're just nail things for nearly every single day, day in, day out. So let's do our pre-market for this morning.